there's really two aspects to the tax savings in ESOPs. It's either on the shareholder side of the transaction at the time of close, or it's for the company over the long term. On the shareholder side, shareholders can elect what's called 1042, it's governed by Section 1042 of the Internal Revenue Code. And effectively what it says is, as I sell my shares to the ESOP, I can take those proceeds that I receive, reinvest them into qualified replacement property, effectively stocks and bonds of US-based businesses, and I can defer the taxation on that sale, right? I don't have to recognize capital gains. Based on how much I invest into QRP, I'm able to defer that taxation. Obviously, as an entrepreneur, that's a great tax savings, right? I go from paying 23.8% or whatever the long-term capital gains rate is to paying no taxes because I've deferred that using 1042. The constraint of that is the company has to be a C Corp, which I'll hit on in just a second there. The other aspect of the tax savings is for the company side. So if it's an S Corp owned ESOP, S Corps are flow-through type entities. They issue the K1s to the shareholders. Shareholders have to pay the tax. ESOPs are tax-exempt entities. So whatever proportion of ownership that the ESOP has, it receives a K1, but it doesn't have to pay any taxes on that. And so if you're 100% S Corp owned ESOP, you've really created a structure where you've mitigated 100% of your income taxes on your earnings. So from a cash flow capacity, if I make $10 million a year as a company, I'm no longer having to write a check to the government or distribute out money to write a check to the government. And I freed up all of that cash flow in order to, repay debt, reinvest in the company, grow the business, et cetera. Why that's important though is that when you're a C corporation, yes, you can get 1042, but you're not able to have the tax deferral strategy going forward. If I'm an S Corp, I move to a C Corp, I have to wait 5 years before I can go back to being an S Corp. And so in our feasibility analysis, we really analyze it from both perspectives, the shareholder side and the company side. And really, it's just a math equation to say what's the biggest tax break that we can generate, what's the most efficient structure, and then that would be our recommendation.